Hi, I'm Calvin Rose, and welcome to Market Minute. Boy, have we got a lot to talk about this week. If you like these videos, please hit the like, subscribe, and notification icons so you'll never miss an upcoming episode of Market Minute. As I said, there's a lot to talk about this week, including the fact that my neighbor is out there mowing his lawn again. He does this at least 5 to 6 days a week. I don't get it. But anyway, let's talk about what happened this week and what we're seeing, because it's really interesting. So let's take a look at how the markets performed on Friday, yesterday. And I've drawn this green arrow in because it's green because if you look at the direction of the arrow, it's going to better performance. Even though these were all bad, you can see that the small cap, the riskiest investments, perform better than the NASDAQ, the next most risky investment, better than the S&P, the next most risky investment, better than the Dow Jones Industrial Average, the least risky investment of these four. This is really telling, and hopefully this will keep playing out into next week. And it's showing up in some of our metrics as well. So let's talk about what we're seeing here and what it might mean going forward. I'm going to go through this a little differently than usual, and there's a reason behind it. We're going to start with gold this time. I usually start with equities, but I think there's an interplay going on here that's significant, and we'll see how it plays out next week. But I kind of like what I'm seeing here. So first of all, gold risk a week ago was low, and if we look at it this week, it is now very high. And why do I see this as a good thing? Well, gold has been the safe haven for assets during this, increasing interest rates and the war in Ukraine. People have been running to gold for safety. That appears to be sort of waning, and it's been we've seen signs of it waning now for several weeks. If you look at some of my previous videos, I've talked about it, but it really has kind of gold has dropped off in terms of its appeal, at least for now. So I'll describe that. I'll show some charts of the of gold versus the Dow and the S&P 500 and the Qs a little bit later. So why do I say gold is at very high risk? Well, if you look at the buying pressure and the selling pressure, you can see here that the selling pressure has just been shooting up through the roof, while the buying pressure is falling, dropping precipitously here. So gold, and the price has also been dropping. So, and gold really hasn't done much since it peaked out way back here in early March. Kind of pulled back and has been going sideways with a little bit of a rally here that we took advantage of for our clients, but we got out as soon as we started seeing this falter. Now let's jump into equities. So equity market risk a week ago was very high, and this week we're just ranking it at high, and let me explain why and what I'm seeing here. So if we look at the NASDAQ 100, the NASDAQ 100 is full of tech stocks, and tech, as we all know, tech stocks have just been getting bludgeoned since the beginning of the year. And you can see here, that they fell, they tried to rally here and have started falling again, almost like we're going to get a double bottom, but who knows. But what I see, and I've drawn some extra arrows in here, so the orange line's the selling pressure, and you can see over the last month, the trend has been higher selling pressure. And for the buying pressure over the last month, the trend has been lower buying pressure. And if you look over the last 2 months, same thing, right? So over the last 2 months, buying pressure declining, selling pressure increasing. But if we look at more recently here, you can see that the selling pressure has been dropping off and the buying pressure has been increasing slightly. And what does this tell me? Well, earlier I talked about how the markets performed on Friday, and I said the small caps performed the best, the NASDAQ performed second best, the SPY third best, and the Dow the worst. Why is this meaningful? Well, when people start to go back into equity markets, they typically start to buy the more risky assets sooner. And we're sort of seeing that here. Hopefully this will continue. But let's look at how the Dow Jones Industrial Average looks. So the Dow, you can see the Dow didn't fall like the Nasdaq. In fact, it's been doing pretty well here. It's been kind of going sideways. But what do I see here? If we look at the selling pressure over the last month, it has been steadily increasing, and the buying pressure has been steadily decreasing. And why do I think this is a good thing? Well, people have been using the Dow as sort of the safe haven for equities. That appears to be ending here, and let's hope this trend continues. Now let's look at the S&P 500. So for the S&P 500, same thing, selling pressure increasing, buying pressure decreasing. Now you could say that's bad for equities overall, but the fact that the Nasdaq 100 performed better than either the Dow or the S&P 500 on Friday is a good sign. And in fact, the small caps performed the best of all. So I see this as a good thing for equities. So let's go in here and take a look at how these different components have fared since the beginning of the year. You can see here, the black line is the Dow Jones Industrial Average, and you can see it has performed pretty much better than everything else. It didn't drop as much here, and it's been kind of faltering here lately. You look at the S&P 500, the blue line. It's been a pretty rough ride, but not as bad as the Nasdaq 100, which is the purple line. So the purple line is the Nasdaq 100, and that had the biggest drop. It tried to rally back here. It had a really nice run up, and then now it's fallen way off again. And this sort of pinkish line here, that's gold. That has been the safe haven, and you can see it here. When these were tanking, this was going up. But now it seems to be just kind of going sideways and faltering. So I'm hoping that this is a sign of good things to come for equities in the next week. But we'll have to wait and see. We'll have to wait and see if equities continue to build momentum or if they really tank next week. Now let's take a look at interest rate risk. Interest rate risk a week ago was very high, and this week it's also very high. And you can see that here. So here's the price of TLT, which is the average duration is 20-year government treasury bonds. You can see the price has just been getting beat up here. It's been dropping steadily over the last couple of months. And you see that the selling pressure has been steadily increasing, buying pressure steadily decreasing. So not a good sign for interest rates, which isn't a surprise. The Fed is going to raise interest rates to try and fight what they perceive as non-transient inflation. Well, we'll see how that plays out. So where do we stand with cryptocurrencies? Cryptocurrency risk a week ago was high, and this week it's low. And I like to look at cryptocurrencies as a sort of a tech investment, right? Because blockchain is a technology. Cryptocurrencies aren't currencies yet. They may become currencies, but they're not really quite there. So it's really a technology. And if we take a look at why I say the risk at cryptocurrencies is low, if we look at this chart, obviously there was a huge spike in buying pressure back here, and you can see cryptocurrencies had a nice rally. They then faltered, but what's happening here more recently is the buying pressure is increasing. You can see that over the 1 month trend, and if you look at the solid line, you can see it's been going up, and selling pressure has been decreasing. So they crossed back here, but cryptocurrencies haven't really done a whole lot since then. They've been kind of going sideways. So I'm hopeful that the cryptocurrencies will start to go up again. The bottom line for this week's market review is that equities are starting to show some promise. That doesn't mean the market's going to go up next week. We'll have to wait and see how that turns out. But I like what I see so far. I'm Calvin Rose. This is Market Minute, and thank you for watching today. If you like this video, please hit the like, subscribe, and notification bell so you won't miss an upcoming episode of Market Minute. That's all for now.